In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host, Matt Goolsby, and today we're talking about a Cinderella story. That's exactly why we've gathered a team of professionals for this episode. Today, our panel includes Joshua Sikora, CPA and tax advisor from Market Tax Services, Alex Robinson, estate planning attorney from Eidelman Law Firm, and Trey Bassa, health insurance advisor with Market Medicare Advisors. Welcome in, everyone. Now, I said we're talking about a Cinderella story here, and that's exactly what we're going to call the client today. That's not her real name, but Cinderella came to one of these classes we do and around the metro, and she was going to cash out her 401k and pay off her house. This is not the first time we've come across this. And when she attended our taxes and retirement class, afterwards she booked a one-on-one with us, and she wanted to walk through and figure out how much in taxes she should withhold out of this large 401k. So we brought in our tax coach, Joshua Sikora, to figure out the best play for Cinderella here.
Yeah, so the great thing about coming in and having these conversations is we can talk through, we can model it out, we can see what the numbers are going to look like before she actually commits to that course of action, running that play, right? And so we started talking about, all right, well, how much do you need to pay it off? Okay, well, where are you at in your other sources of income? You know, what is already going to happen regardless of what you do? And then we started to explore, well, what would that cost then in terms of taxes? How much would she take out not just to pay off the house, but also to pay off Uncle Sam, because he's going to want to cut of that action at the same time. And so then we started kind of talking through how expensive that was going to be, and then compare it to the interest costs she would pay just by paying off on that mortgage as it was scheduled. Because, I mean, as I'm sure a lot of people are aware, you pay less and less interest each payment as you go. And so we kind of started exploring what was even leading her down that path. And she was talking about her payment moving around. And so you said something about, you know, are you on a fixed rate? Does that interest rate move? She's like, no, it's fixed. So then we started talking about, well, your payment's moving not because of the cost of the house, but it's that insurance and taxes that just clicks along regardless of whether you have a loan or not. And so then we started comparing, you know, apples to apples, the cost of keeping the mortgage, the cost of getting rid of the mortgage. And she kind of realized that maybe this wasn't the greatest course of action.
So what you're saying is, and I'm going to channel my Charles here, the taxes were terrible.
Terrible.
Yeah. I didn't do a very good job there.
Yeah, the taxes were going to be more expensive than paying the interest. And whether we call it interest, whether we call it taxes, it's the cost of touching the money, whether it's the bank's money or her own money. And at the end of the day, what she really wants to do is keep as much of her money for herself.
Sure. So that large withdrawal to pay off the mortgage was going to push her into all these higher tax brackets, and it really wasn't going to be beneficial for her financial or even retirement plan situation.
That's right. It was, I mean, because then that money's missing out of her 401k. It can't sit there and grow. It can't be available for other things that she might need. So then, yeah, it was really going to hamstring her lifelong retirement picture.
Good analogy there. So Cinderella, since she wasn't going to cash out her retirement, she needed help on how not to lose it all due to market volatility. You know, the markets would go up and down, so we crafted that plan for her that was more in line with her risk tolerance and reduced the ups and downs of the market, so to speak. And Cinderella, she didn't have the right fit for not just her retirement plans, but other things too, and we'll get to that in a second. But if life, it's not really like a fairy tale, so to speak, right? Where a handsome prince is traveling through the kingdom to find Cinderella in order to give her the retirement that fits her needs perfectly. So Cinderella had to go find that herself. And if you don't have a retirement plan that fits your needs, all it takes is a 15-minute introductory phone call to see if Market Advisory Group is the right fit for you. To set up that 15-minute phone call, just call 833-MAG-REPORT, or that phone number is 833 624-7376, or better yet, you can go visit our website at eyeonretirement.com. There you can also check out past episodes where we focus on different client stories where retirement didn't go quite so right. In the next segment of Eye on Retirement, we'll continue with this Cinderella story on her estate plan and healthcare. Stay tuned. Hi, and welcome back into Eye on Retirement. In the previous segment, we were talking about a Cinderella story. She had started working with us because she had some questions around some taxes on her 401k withdrawal. She wanted to take that out and pay off her house. But we had one of our tax advisors show her that quickly she was going to be paying more in taxes than she would in even interest on that mortgage. And so once we figured out what to do there, we asked Cinderella, do you have an estate plan to protect the house or your other assets? And she actually said, no, I hadn't even really got to that. So we brought in one of our estate planning attorneys, Alex Robinson, into the conversation. So Alex, what was going on in Cinderella's story here?
Yeah, well, it's interesting because when she came to see us, she had just wrapped up a nightmare probate of her dad's estate, passing his castle on, so to speak. And so she was really motivated to make sure that her children didn't have to go through that same process because it had been so unpleasant for her to figure out, what was going on. Her stepmother was trying to get a piece of something that her dad was trying to leave to her and her siblings. And so the process dragged on, and it was just really uncomfortable and really unfun for her and for her entire family. So when she came to see us, that was one of her primary motivations. She wanted to make sure that everything went to her children and it went as smoothly as possible so that they didn't have to jump through all of these hoops that she had to jump through and really endure a lot of trauma, because the probate process, especially if it's not on a plan that you're aware of, can be a very traumatic thing, especially when you've lost someone you care about.
Well, I know when you guys are given your estate planning classes, you guys talk about how probate at a minimum is 6 months typically, and normally it's longer than that.
Yeah, absolutely. It's a process that has to take 6 months because the court says, hey, we know there's creditors out there and we got to give them time to do it. So probate can't close until the 6-month date from the time of death. And so it's a process that takes a lot of time, it takes a lot of money, and there's a lot of uncertainty during the process. So we want to avoid all of that as much as humanly possible and make sure the process works as automatically as possible so that people feel more secure and they understand what's happening.
And that's just the time aspect. Probate can be pretty expensive as well, and you just don't want your loved ones to have to deal with that after you're gone. And fortunately, we would help Cinderella here with that plan to make sure that didn't happen. So thank you, Alex. So in the previous segment, Joshua and I were talking about how if you take those large withdrawals out of your retirement accounts, those accounts that have never been taxed, it could cost you more for your Medicare. How does that happen? I mean, let's hear from Trey Bassa with Market Medicare Advisors. Is this what we refer to as IRMA?
Indeed. IRMA, the income-related monthly adjustment amount, is going to come into effect for Cinderella, not the year she takes that money out of the 401k, but 2 years down the road. What the IRMA tax, if you will, does on a Medicare beneficiary is it takes a look at their income, how they file, and it puts it into this chart. If you exceed a threshold any 1 year, you're going to pay more for your Medicare premiums, parts B and D. So had she actually followed through with pulling money out of that 401k to pay off her castle that year, it would have come around to cost her more down the line when she was on Medicare for parts B and D, costing her every month. And then she'd have to jump through some hoops to get that down charge, so to speak. So she's not paying as much for part B and D anymore. Again, it's a 2-year look back period.
And I'm sure by the time that rolls around and the left-handed government talks to the right-handed government, when Social Security and Medicare finally learn from the IRS what someone's income is, it can be kind of a shock to someone. They get those letters in October, November of the year. What? They're gonna withhold this money from my Social Security payment?
Right. It's because it's such a long look back period, people often forget about it. September rolls around with an annual notice of change. They get this update. Oh, okay, there's a cost of living adjustment. There's a Social Security increase for every individual, but they're also going to announce how much you owe for your Medicare premiums. This is the threshold that you exceeded. This is what was reported to the IRS. This is what you have to pay. And it can go by the wayside. People often forget about it.
When we're doing tax planning with clients, this is one of the things we highlight. There's a whole section in that planning document that says if we make these choices, if we elect to go down this path, this is how your Medicare will change. And I mean, we have our clients sign off on it so that they acknowledge that this is what we've talked about. And we've still had people come back 2 years later and say, hey, why is my Medicare going up? And so we just pull out the plan. Remember we talked through this? Oh, that's right. But at least there, they get the comfort of, well, at the time I had agreed to that, and now I remember why it's beneficial. If in Cinderella's case, she wasn't working with Advisor, she's going to be confused and forget about how great it is having a paid-off house.
Well, let me recap this let me go back to the play-by-play here for our viewers here. It has to do with Medicare, but they call it an adjustment. But to me, it's almost like a tax, and it's a tax that needs to be figured in. But you have, again, out there people working on their own, and it's their responsibility to maybe estimate their taxes or figure out what they're going to owe in taxes. But they could quickly overlook or easily overlook this IRMA charge.
Oh, absolutely. This is one it's very hidden. I mean, it's not intentionally hidden. It's just that nobody talks about it because it's not common knowledge. And it hurts, but it hurts worse when it's a surprise.
Well, and I'll ask Trey Bassa, yes, the IRMA has to do with Medicare, but I can kind of make the argument for, I know you guys are aware of it and you tell the people you help about it, but I can make the argument for, is it the financial advisor's responsibility? Is it the tax person's responsibility? Or is it the Medicare advisor's responsibility? And to me, it's really all of them, but if they're not working together, you know whose responsibility it is? The individual, the retiree, and that's where a lot of people miss these things, and it costs them the game, so to speak.
That's right. And who wants to retire and then take on a part-time job of managing their retirement? The whole point of retiring is to have less responsibility, to get to enjoy this life that you've worked hard for and saved for. And that's where having this whole team of advisors working together for you, talking about these things that you may not know about, but they've, the team advisors have been through these things before, so they can make you aware of these pitfalls before you fall into it.
And just as soon as maybe someone learns about all these things, does this stay static forever, or does oftentimes the tax law go, okay?
Oh yeah, no, it stays the same forever. No, it changes all the time.
And this is something that, again, if you're a retiree out there, it's tough to stay up to date on all the changes that happen. We're going to see changes this year, probably in Social Security, Medicare, and even taxes. And this is, again, something we see a lot of people make mistakes on because it's their responsibility to be the intermediary, to be the connection of passing the ball back and forth between all these different advisors.
Yeah, to switch up the metaphor a little bit, we don't do this with our medical life. It's not your responsibility to go between your different doctors and shuffle lab results and opinions and things like that around. But for some reason, we do it on the financial side because it's, not important?
Well, and I think a lot of people don't realize that this is going on, and until they make those mistakes, that's when they engage, oftentimes us or other people to say, hey, what's this going on here? Why am I getting $80 or $90 taken out of my Social Security check, and it goes up from there? Or why am I getting these penalties and interest? Or I took out this withdrawal and it cost me way more in taxes than I thought because of the Social Security taxation. It goes on and on and on and on.
Yeah. Why do I owe so much on my taxes this year? It wasn't that way not last year. Or I'm tired of paying so much on my taxes. What am I missing?
We see a lot of people that are confused and they get frustrated that this costs them extra money. And I don't know about you, but this day and age we're living with inflation, you really need to make sure you're watching every nickel.
That's right, because if you're not, who is?
Well, and you notice I went from penny to nickel because,
inflation. Yeah, I was picking up on that.
So Trey Bassa with Market Medicare Advisors, this is something, again, we work together as this team, but sometimes people that don't realize this IRMA charge hits them, is there things they can do sometimes to mitigate that IRMA charge?
Yeah. So when we sit down and we talk about all the ins and outs of Medicare, that's a big warning I give them. If you are taking a look at your income, if I ask them to look at their income from like 2 years ago, they're kind of giving me the shady, yeah. I say, I promise. I know that this is a very personal question, but it makes sense when you're sitting down with a client to talk about what retirement and Medicare costs are going to cost them in the future. When they sit down with me, they want those numbers. And I can give them a accurate estimation, but at the end of the day, I need Joshua, I need you, Matt, to take a look at some of these things for them. At the end of the day, they sit down and they want to get some hard numbers. I just can't give that to them. I can give them a warning though. Hey, if you're not planning now, it is going to come around to bite you 2 years in the future.
Wherein you and I get together and look at this with long-term tax planning, we look at the RMDs. I mean, if you have some pretty sizable 401ks, million, 2 million plus, if that grows over the next couple of years or however long it takes you to get to that age where you have to start taking the money out, those required minimum distributions are certainly a risk at triggering IRMA.
You're right, you take that, you add in the Social Security piece, maybe they've got some diversification, they got rental properties, they got a pension, all these pieces play together, then and they're doing okay, and then those RMDs come along and really just make the tax picture so awful. And at that point, it's really tough to do anything about it. That's where that planning comes in. You can't play the game without a game plan, right? And expect to be successful.
That's right. And just someone I met with this week, Sarah, not Cinderella, a different person. She had received an inheritance a couple years ago, about $500,000, and that had triggered IRMA right now. And so she's now going through that. But we're trying to, again, sometimes there's ways we can fix that, but it's not a guarantee, right?
Right. The appeal process has life-changing events that they take into consideration to bring down any substantial pieces of income like that. Marriage, death, loss of work, and things like that. It's an appeal that we have to fill out and send in, and then some federal entity has to review it, and then we get some information whether or not we can reduce that IRMA adjustment.
And so, do you have a full team that's helping you navigate the court of life? Retirement really is like a fast breakdown on the court, action-packed basketball game, and it's really more of a by the book that run the plays and the coach calls kind of strategy. Because a lot of times there's just too much at stake to run fast and loose. And that's why we work together as this whole team here, so you don't have to be the one that's worrying about what can happen to you next. What do you not know? Have you ever looked at that on the internet? The internet doesn't help you with that. You can't search, hey, what do I not know that I need to know, right? And so if you're worried about what you could be missing, to set up a 15-minute phone call to see what your retirement plan, again, it could be missing, call us at 833-MAG-REPORT. Again, that phone number is 833-624-7376, or better yet, hop on over to that website at eyeonretirement.com. There you can also watch past episodes or submit a question for us to possibly answer in a future episode. In the next segment of Eye on Retirement, we'll go over our money monitor, maybe our money madness, so to speak, to break down the retirement bracket that we've built out. And you won't want to miss that because, believe it or not, Joshua, I've figured out how to put retirement onto a bracket.
Well, you know what? I can't wait to see that. I think your metaphor skills are going to be put to the test there.
Well, we're cramming a couple in here, right? Cinderella and brackets.
That's right.
Well, you won't want to miss that, so stay tuned because we'll be right back right after this.
Hi, and welcome back into Eye on Retirement. I'm Joshua Sikora, and we're over here at the Money Monitor. And Matt, I peeked ahead a little bit. You've got a bunch of brackets here. What does that have to do with retirement?
That's right. It's that time of year again, and everyone's filling out these brackets, trying to get bragging rights, with their friends and family. So I thought we'd use that structure to explore retirement. So we've got these 4 areas here, and we call them the core 4, and that's made up of finances, taxes, healthcare, and estate planning. These are the big aspects of retirement that everyone has to worry about. And for the longest time, we were just a financial firm, and that's all we did. But as we were helping our clients, we realized that there was more to it than just the finances, because they had questions about maybe their health care or how this was going to impact their taxes. That's why we brought all these different advisors together under one roof. So we're not just a financial firm anymore, we're a retirement firm.
All right, so then let's zoom in on one of these regions like finances and see what's going on there.
Well, again, finances is there's more to retirement than just this, but finances are very complex. So you've got the setup of all your different income streams that work together. You've got your Social Security, your retirement accounts like your IRAs, your 401ks. Hopefully you have some Roths. If these aren't working together, it can have a knock-on effect that can play a mere hob with your finances.
I think we've all been there with our basketball practice where we choose the wrong team to win a first round game, and then we just watch our bracket get destroyed because a low seed team knocked out a high seed team that we really kind of figured was going to go all the way.
Exactly. Because you can't tell the future, there's going to be things that happen. The markets can become volatile, Social Security taxation could change. If you don't have someone helping you maybe keep an eye on the ball with this stuff, your retirement will be in trouble. And it's the same with taxes, healthcare, and estate planning. There's just too much for any one person to handle all of it on their own.
No, I actually want to touch on that just a bit more. What does it look like when your retirement advisors aren't all on the same team?
That's a good point. Well, let's keep going with this basketball metaphor here. You know, let's say we've got the game of life playing. This team is all the things that could go wrong in your retirement. These players are all your different advisors that are not talking to each other, but you can see all this open space for life to break in or break through, for all these things to fall through the cracks, so to speak, and life scores one on you. And a lot of these issues are because your advisors aren't working together, aren't communicating. But if those advisors are all working together, if they have a united front, so to speak, it makes it much less likely that life can slip through. But let's rerun this scenario. Let's talk about when all these different advisors, taxes, healthcare, financial, and estate planning are all talking together. Then they can work as a united front, a team that can be better at defending these awful events that we talk about every week on the show and keep you from, losing the game, so to speak.
Yeah, it looks like they're all running with a coordinated game plan there and keeping life from scoring on you. Now, I'll be honest, I really didn't think you'd be able to tie retirement and basketball together like you just did there.
Well, you know me, I can always crank out a sports ball metaphor when I have to.
Well, apparently. Now, everyone loves a good Cinderella story in sports. There's nothing like watching a David beat a Goliath. But when you're looking at your retirement, do you really want to have to overcome the odds all on your own? Or would you rather have a game plan set up to give you the best shot of winning at your retirement? If you'd like to set up a 15-minute introductory phone call with Market Advisor Group just to see if we're the right team for you, please reach out right now at 833-MAG-REPORT. That's 833-624-7376. Or do so at our website, ionretirement.com. If you'd like to see more, search for Ion Retirement on YouTube, where you can find past episodes that highlight common pitfalls in retirement. Now, that's all the time we have for this episode. Thanks for tuning in. I'm Joshua Sikora, along with the rest of the Market Advisor Group team, reminding you we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.